Hello everyone, welcome back to yet another episode of the Financial Friday. I think it's about time that I share with you guys a topic that's very dear to me. That is how to invest in the stock market in the year of 2020. And before I proceed, I need to highlight an important point. That is, stock market investing and trading involves substantial risk. Past performance is not indicative of future result. And before you decide that this endeavor is suitable for you, please do your own due diligence. Yep. With that out of the way, I'd like to share a bit more about my backstory. So I've started investing for more than 8 years now, way before I've completed my studies as well as national service. So all the money that I've put into the investment engine is really the hard-earned money that I've accumulated from part-time, summer intern, all the way up to now where I accumulate the money from the full-time employment job. At this point of time, some of you might ask, why should we listen to you? And are you even profitable? And yeah, your concern is definitely valid. Why listen to someone who you don't know on YouTube? Plus, there's already so many YouTubers on financial advice out there. A quick clarification, I'm not insanely profitable right now. Something like 30% annualized return similar to Warren Buffett, but I'm definitely beating the stock market, the S&P 500 indices, which yields about 10% annualized return. But the US market recently has tanked and shaved off 3 months worth of gains in less than 5 days. I think the Cornorial bears are in control of the market right now, which is a good thing for us as we have more opportunity to find good bargains in the market right now. Partly also the reason why I'm releasing this video right now. And enough of me rambling, let's jump right into the tip number 1 of the day, that is understand the big picture. I'll flash in a video clip by Dalio which explains how the market ebbs and flow and goes in cycles. So check it out. It's only 30 minutes and yeah.
How the economic machine works in 30 minutes. The economy works like a simple machine, but many people don't understand it, or they don't agree on how it works, and this has led to a lot of needless economic suffering. I feel a deep sense of responsibility to share my simple but practical economic template. Though it's unconventional, it has helped me to anticipate and to sidestep the global financial crisis, and it has worked well for me for over 30 years. Let's begin. Though the economy might seem complex, it works in a simple mechanical way. It's made up of a few simple parts and a lot of simple transactions that are repeated over and over again a zillion times. These transactions are above all else driven by human nature, and they create 3 main forces that drive the economy.
So tip number 2, that is to understand your risk profile. Everyone have different risk tolerance, and certainly everything is nice and rosy when everything is green, the stock market is higher, you bought the price at a lower price, all things is great. But the true test to an investor is when the price comes down way below what you have purchased the stock for or the business. And what will you do? Will you stop loss? Will you stomach the paper loss? So these are the consideration. There is no right or wrong, but you just need to know that in the long run you are supposed to be profitable, and there are instances where the buy and hold strategy typically used by people out there, retailers, won't work. So for example, look at the stock company, the company name Creative or GE. People who bought at the all-time high at 60s or 90s dollar, the prices right now never went down and never looked back. So even after holding for 10 over years, the prices didn't go back to the original. So whatever they put in, it's a loss and it's never gonna go back. Yeah. Tip number 3, it takes skills and practice to evaluate the value of a business or company. One thing that Warren Buffett always preach is that once you purchase the share of a company, you're no longer just a shareholder but a business owner. So don't treat it just like a paper or digits representing your ownership in your central CDP account, but rather think of yourself as a owner of a business. So whenever you look at a stock or a company, when you make the decision to purchase it, you should think that you should think as if as you would purchase the company wholesale from the owner. So and you think that the value of the company right now is much lower than what it's selling for. Like what you're trying to do is to buy $1 using 70 cents, something like that. So once you see that a company is way below its value, underpriced, then you look to scoop in and buy the value. And yeah, think of it as you are buying it whole off the market. That should serve as a good guidance. And pro tip, never marry yourself to a stock. So the reason why I point this out is similar to the reason I've shared in the tip number 3. That is, once the market has lost its value, the price can sink all the way to the bottom and never look back. So there's a short clip by Peter Lynch explaining how a business that goes to zero, no matter how cheap the price is, it can still go to zero. So yeah, check it out.
I've tried prayer, that hasn't worked. So if you don't understand the company, you have this problem when they go down. Eventually they always come back. This one doesn't work either. People think RCA just about get back to its 1929 high when General Electric took it over. A lot of double knits never came back. Remember those beauties? Floppy disks, Western Union. The list goes on and on. People saying it'll come back. Well, it doesn't have to come back. Here's another one you hear all the time. It's $3. How much can I lose? I've had people call me up saying, I'm thinking of buying the stock at 3. How much can I lose? Well, again, you may need a piece of paper for this, but if you put if you put $20,000 in a stock at 50, or your neighbor put $20,000 at 50 into the stock, and you put $20,000 in at 3, and it goes to 0, you lose exactly the same amount of money, everything. And people say it's 3. How much can I lose? Well, if you put $1 million on it, you can lose $1 million. Just the fact that stock, this may be a reason to research a stock. The fact that stock is 3 down from 100 doesn't mean you should buy it. And in fact, short sellers, people that really make money in stocks, they don't short Walmart, they don't short Home Depot, they don't short the great companies, Johnson & Johnson. They short stocks down from 80 to 7. They'd like to short it at 16 or 22, but they figured out at 7 that this company is going to go to 0. They just haven't blown taps on this thing yet. It's going to 0. And they're selling it short at 7, they're selling it short at 6, at 5, at 4, at 3, at 2, at 1 1/4. And you know, to sell something short, you need a buyer. Somebody has to buy the damn thing. And you wonder, who's buying this thing? It's these people saying it's 3. How much lower can it go? You know,
Check out other Financial Friday videos on the right. And have a great weekend. And I will see you next week. Peace out.